Hey, Glow Getters! We've got less than a month left in 2025, and if you don't make these 3 financial moves before December 31st, you're literally leaving money on the table. I'm talking thousands of dollars. So grab your coffee, take some notes, and let's make sure you end this year strong and start 2026 even stronger. Let's go. Welcome back to Finance and Glow. I'm Flo Kapoor, self-made millionaire. I went from 45K in debt to over $5 million in net worth by age 35. And listen, December isn't just about holiday parties and gift shopping. It's also one of the most important months for your finances. Why? Because there are strategic moves you can make right now before the clock strikes midnight on December 31st that will save you money, set you up for success, and put you ahead of 90% of people going into the new year. I'm breaking down the top 3 financial moves you must make before year end. These are the exact moves I make every single December, and they've been a huge part of how I built my wealth. So let's dive in. Okay, move number 1, max out your retirement contributions. Now, before you roll your eyes and say, Flo, I can't max out my retirement account, please hear me out. I'm not saying you have to hit the full $23,000 limit for your 401k. I'm saying contribute as much as you can before December 31st. Here's why this matters. Reason number 1, tax savings. Contributions to your traditional 401k or traditional IRA are pre-tax. That means they lower your taxable income for 2025. Let's say you're in the 22% tax bracket and you contribute an extra $2,000 before year end. You just saved yourself $440 in taxes. That's real money, babe. Reason number 2, free money from employer match. If your employer matches your 401k contributions and you're not contributing enough to get the full match, you're leaving free money on the table. Example, your employer matches 50% of your contributions up to 6% of your salary. If you make $60,000 a year, that's a potential $1,800 in free money. Are you getting all of it? And reason number 3, compound interest. Every dollar you invest today has years to grow. The money you put in this December will compound for decades. Future, you will be so grateful. What to do right now? Log into your 401k or IRA account. Check how much you've contributed so far this year. See if you can increase your contribution for December, even by $100 to $500. If you get a year-end bonus, consider putting a chunk of it into retirement. Even if you can't max out, contributing something extra before December 31st is a win. Move number 2, do a full debt review and attack high-interest debt. Listen, December is when a lot of people add to their debt. Holiday shopping, travel, all of it. But it's also the perfect time to take a hard look at your debt and make a plan to destroy it in 2026. Here's what I want you to do. Step 1, list all your debts. Credit cards, student loans, car loans, personal loans, everything. Write down the balance, the interest rate, the minimum payment. Step 2, identify your high interest debt. Anything over 10% interest is high interest and should be your priority. Credit cards are usually 18 to 25% interest. Those need to go. Step 3, make an extra payment before December 31st if you can. Did you get a year-end bonus? A holiday tip? A tax refund? Throw it at your highest interest debt. Here's why. If you have a $5,000 credit card balance at 20% interest and you throw an extra $500 at it in December, you're saving yourself months of interest payments. That's money back in your pocket. Step 4, set up your debt payoff plan for 2026. Use the debt snowball or debt avalanche method. I personally used the snowball method to pay off my 45K, and it worked. And listen, if you need help tracking your debt payoff, my Debt Freedom Tracker is literally built for this. It has a debt snowball tracker, payoff timeline, and monthly progress logs. It's linked in the description. The goal is to go into 2026 with a clear plan to eliminate debt, not just hoping it magically disappears. Move number 3, review your taxes and make strategic deductions. Okay, I know taxes aren't sexy, but you know what is sexy? Keeping more of your hard-earned money instead of giving it to the IRS. Here are some year-end tax moves that can save you thousands. Move 1. Contribute to a traditional IRA. You have until April 15th, 2026 to contribute to an IRA for the 2025 tax year. But if you do it in December, you can see that tax benefit now and plan accordingly. For 2025, you can contribute up to $7,000, $8,000 if you're over 50. Move 2. Harvest your investment losses. Tax loss harvesting. If you have investments that are down this year, you can sell them to offset capital gains. This is called tax loss harvesting, and it can lower your tax bill. Disclaimer, I'm not a tax professional, so talk to your CPA or financial advisor before making moves like this. Move 3, make charitable donations. If you're planning to donate to charity, do it before December 31st so you can deduct it on your 2025 taxes. Keep your receipts. Move 4, max out your HSA, health savings account, if you have one. HSAs are triple tax advantaged, tax deductible contributions, tax-free growth, and tax-free withdrawals for medical expenses. For 2025, you can contribute up to $4,150 for individuals or $8,300 for families. Move 5, review your withholding. If you're getting a huge tax refund every year, you're giving the government an interest-free loan. Adjust your W-4 so you keep more of your paycheck throughout the year and invest it instead. What to do right now? Pull up your tax documents from last year. See where you can optimize IRA, HSA donations. Schedule a meeting with your CPA in early January to plan for 2026. These small moves can save you hundreds or even thousands of dollars. Okay, bonus move because I love you. Set your 2026 financial goals. You can't hit a target you don't have. So before January 1st, I want you to sit down and decide. How much debt will you pay off in 2026? How much will you save? How much will you invest? What's your income goal? What financial habits will you build? Write them down, make them specific, make them measurable. Example, pay off $10,000 in credit card debt by December 2026. Save $5,000 emergency fund by June 2026. Invest $500 month in index funds. Increase income by $10,000 through side hustle. When you have clear goals, you make better decisions all year long. And here's the thing, 2026 is going to come whether you plan for it or not. You might as well have a strategy. All right, glow-getters, here's your action plan for the next 30 days. Move 1, max out or increase your retirement contributions. Move 2, do a full debt review and make an extra payment if you can. Move 3, review your taxes and make strategic deductions. Bonus, set your 2026 financial goals. If you do these 4 things before December 31st, you'll be ahead of 90% of people going into the new year. And if you want help tracking your debt payoff and staying on top of your goals, grab my Debt Freedom Tracker linked in the description. It's the exact tool I use to pay off $45K and build my $1 million net worth. Drop a heart in the comments if you're committing to making these moves before year end. And if this video helped you, hit that subscribe button. I drop new videos every week. I'm Kapoor, and remember, we build wealth and stay radiant doing it. I'll see you in the next one. Keep glowing.